Good morning, everybody. I hope you're all keeping well. Welcome to day 3 of the conference. This morning, it's sector development, policy, and regulatory issues are our main subjects. And we've got 3 wonderful speakers joining us here today. So just to give you a summary of who we have, we're going to have Paul Lemass, our Assistant Secretary at the Housing Policy and Governance and Legislation Division of the Department of Housing. We have Kathleen McDowell coming in all the way from Australia, Sydney. So it's good evening over there, I believe. So welcome. And Kathleen is the Head of Policy, Community Housing and Industry from New South Wales. And finally, then we have John Hannigan, CEO of Circle. John is well known to many of us and has been around for many years, a lot of experience, and he'll be bringing some of his knowledge experience from an AHB perspective. So what we'll have today is we have 3 speakers, and we have a Q&A tab there. So we would encourage people to post questions during and after the presentations, and we'll have a hopefully a good detailed Q&A session after all 3 presentations. And our plan is to try and wrap it up by about 11:30 today, all going well. So that's pretty much it in terms of the overall summary for today. So what I'd like to do, maybe we'll kick off with our first speaker. So our first speaker is Paul Lemass. Paul is Assistant Secretary, Department of Housing. Paul is overall responsibility for the housing policy and governance, and obviously the new regulatory authority and the establishment of that this year. So Paul's going to talk about the sector, a little bit about the Act, and about the regulatory environment that we're currently involved with. Okay, Paul, I'm going to hand it over to you if you're ready.
Thank you very much, Martin. Can everybody hear me okay? I'll take that as a yes, I think, yes. Can everybody hear me okay? Well, first of all, I'd like to thank the ICSH for organising this conference and indeed for inviting me to speak at it. Today has been a difficult day for the department. We learned yesterday of the passing of our valued friend and colleague, Tom Gallagher, following a long battle with illness. Tom worked in the department for many years across areas such as environment, local government and housing, where he was responsible for the introduction of HAP and RAS systems. So I think it's important that we remember him and the contribution that he made to public policy in these areas. And of course, our thoughts are also with his wife, Anya, and their 3 young children at this difficult time. Maybe if I could move on then to talk about the sector. I'll give a brief overview of the sector, talk a little bit about progress with the regulation and the timings involved, and maybe wind up with some reflections on the current register. The AHB sector in Ireland is a busy one. We have 555 registered AHBs in Ireland, and they range from the highly active and high growth Tier 3 AHBs to the Tier 1s, which would be much smaller and maybe more regional in focus. It's a crowded space in many ways. Many of the AHBs offer care and support in the health setting and social settings as well. By way of example, of the 247 AHBs that are being assessed by the Interim Regulatory Office, 40% of them received HSE funding, and 31% of them were funded by other government bodies and agencies such as the Dublin Regional Homelessness Executive, or TUSLA, or the Department of Justice, or the Department of Social Protection. So it is a crowded space from a regulatory and an operational perspective, and we're very conscious of that, and we're very conscious that regulation has to work in that environment. Maybe to talk a little bit about the journey we've been on in regulation. I spoke at last year's conference in Wexford and talked at that stage about the imminent publication of the AHB bill. But this has been a while in gestation, and I think that's been a helpful period, because if you look back, we started in 2013 with the introduction of the Interim Regulatory Committee and the Voluntary Code. And what that has meant effectively is we've had a transition period of 7 years to get us to where we are today. And that time has been well used to build an awareness of and a level of compliance with the Voluntary Code. In 2014, the Interim Regulatory Office was established, and in 2015, the general scheme, the broad framework of the Approved Housing Bodies Bill was approved by Cabinet. In 2016, we made a formal link with our funding mechanisms when we introduced Circular 15 of 2016, which linked funding eligibility with compliance with the voluntary framework. And then we ended up late last year in December 2019, we ended up getting the Act through both houses of the Oireachtas and signed into law at the end of 2019. And I think it's important to mention that there was a broad consensus around this Act. All sides of the House supported it, and there's a general recognition that this is the right direction of travel. The objectives of the Act, I suppose, the main thing is that this regulator will oversee the effective governance, financial management and performance of the AHB sector. There is also, of course, the objective that we want to safeguard public and private investment in social housing provision. And there's an important provision of insurances to stakeholders and the public that the sector is well managed. And I think the existence of a regulator will help in that regard. The regulatory authority, when it's established, will have a board of 5 to 11 members and a CEO and staff. And the board effectively will be the regulator. It isn't an individual person who is the regulator. The board of 5 to 11 members is the regulator, supported by the CEO and staff. We expect that a chief executive appointment will be imminent. We're just engaging with the Public Appointment Service on that right now. And we expect Establishment Day, hopefully, to be the 1st of January 2021. That will be the day when the regulatory authority takes shape, but the statutory regulatory framework we would expect to take shape on the 1st of January 2022. In the interim, we would see a staggered commencement of legislation to enable all of the steps to happen in between, and probably the most important step of those would be the adoption of draft standards for approval by the Minister in the intervening period, and there'll be an extensive consultation process as part of that. The Act also provides for memoranda of its understanding between this regulator and other regulators, because obviously people like HICWA, the charities regulator, local authorities, there's a lot of other players in this space, and it's important that there's good collaboration between them, and the Act explicitly recognises that. The Act also provides for an appeals panel for issues like registration, compliance and cancellation, and that will also be commenced during the course of 2021 or at the beginning of 2022. So when the regulator is established, the key functions will be to establish and maintain the register, including the registration of new AHBs. That's a function that's currently performed by the department, but that will transfer over to the regulator. They will draft standards for ministerial approval, and they will monitor compliance by AHBs with those standards. The regulator will have the power to initiate investigations and will have a broad remit about the development of the sector through governance, administration and management. And of course, will publish information annually through a report, I think in the same way as the voluntary regulator currently does. So on January 21st, 2022, we would hope that all sections of the Act would be commenced, standards would be published, and an important point to make here is that all AHBs on the department's register will be deemed to be registered on that date. That means all 555 AHBs will be deemed to be registered and subject to the provisions of the Act to the who are participating actively in the voluntary code. So that's an important message, and it does lead to considerations for those who are not currently participating in the voluntary code as to where they see their future lying. The voluntary code will of course expire once the statutory framework comes into effect. And I think one of the things we have been mindful of is indeed the fact that we have 555 and not all of those might want to be under the statutory framework. So we're undergoing a review of the current register. We're writing to those AHBs who have not engaged with the voluntary process, and we've had some good engagement, and we've put in place a process where they can rescind their status if that's what they want to do. And I think it's important for people listening today to consider their own organisation and where they see their future, if they have been engaging with the voluntary code or if not. There are options available. Obviously, full engagement and continued existence as an AHB is an option, but options such as merging, partnerships, transfer of stock, these are all things that people might wish to consider. To wrap up, we will have an extensive communications campaign over the course of 2021 at a national, local and regional level to underpin this transition. But the D-Day, I think, really for many of us will be the 1st of January 2022, at which stage we will be fully transitioned into the statutory framework. And that's an important date for all of us. So thank you very much, Chair. I'll wrap it up at that, but happy to take questions as part of the discussion at the end. Thank you.
Thank you, Paul. Thank you very much for your presentation. And may I just preface, before I say anything else, that we all wish the family and friends and colleagues of Tom Gallagher the best wishes. And very sorry to hear that news. And I'm sure everybody who's dialing in today who knows and have come across Tom would say the same. So very sorry to hear that news of your colleague. And just thank you very much for your presentation. Just to summarize quickly, that really it's the regulatory sort of framework that we're now going to be moving into for 2021, and the registration process, the appointment of the CEO, and then the probably one of the most important elements that you mentioned is the communications campaign that will be running throughout 2021. And I'm sure we'll come back with any specific questions at the end of the sessions. So thanks very much, Paul, for that. So our second speaker is Kathleen McDowell, all the way from Sydney, Australia. Welcome. Kathleen is Head of Policy at Community Housing Industry Association in New South Wales, and we're really very pleased that you were able to join us today, and really looking forward to hearing about how it works in Australia, the regulatory setup there, and the process, because you're obviously been in that situation for a number of years now, and look forward to hearing your presentation. And I think a lot of our participants will as well. And actually on that point, we have nearly 190 people already dialed into the conference. That's great. So we've got a lot of people very interested. Okay, Kathleen, I'll hand over to you.
Thanks, Martin. Good morning, everyone. I've managed to say good morning and not good evening, so I think I've hit my KPI already. It's really great to be here. Thank you to the Irish Council for Social Housing for the invitation to speak with you today. The Community Housing Industry Association New South Wales is probably best described as something of the Irish equivalent for the community housing sector here. The New South Wales community housing sector is the largest in Australia. At the moment, we have 50,000 properties in our state, which are owned or managed by our members. And CHIA New South Wales, I should hasten to add, CHIA New South Wales is our acronym, not a superfood. We have about 100 members at the moment as well. So what I want to be able to do today is to talk you through what we have learned in the last 6 years of the regulatory system in Australia, and to provide some observations from our perspective as a peak body that has not-for-profit providers as part of our membership. In a previous life, I also worked for one of those providers, one of the larger providers in New South Wales as well. So my observations come from those two different points. Just firstly, an introduction to the housing system and how it all works here very briefly. We have 3 levels of government that have some level of involvement in the funding and delivery of housing in Australia. So through the federal government, all the money comes from the National Housing and Homelessness Agreement, and that filters down through to the state and territory governments, of which New South Wales is one of them. The interplay with the regulatory system happens very much at the federal government level and the state and territory government level, which I'll get to very shortly. Another innovation that I will flag very briefly today as well will be the National Housing Finance and Investment Corporation. This is our affordable housing bond aggregator, which has been in operation for the last 2 years and has helped our members to access lower cost, longer term finance, which we've been able to use those savings to reinvest in the supply of new social and affordable housing. At the 3rd level, local government also does have a role to play in the delivery of new housing, but is separate to the regulatory system, so I won't be discussing that today. Now, just to a brief overview of how the social housing system works in Australia. So social housing is provided to people on low incomes. About 95% of people living in social housing in Australia are primarily reliant on a government benefit as their main source of income. This system provides housing to people with disabilities, older people, single parent families, and also to Aboriginal and Torres Strait Islander people, our first Australians who, as a result of colonisation and long-standing disadvantage, are overrepresented in the social housing system. Now, as you can see from the graph here, we have around 400,000 properties that are part of this system nationally. 100,000 people live in those. Now, this system is comprised of 4 different sectors, 2 of which are government operated, so that's public housing, and state-owned and managed Indigenous housing, so the little blue bars there and the dark blue bars. Community housing is the sector which CHIA New South Wales represents, and then there is also Indigenous community housing, which is a smaller sector that is specifically provides housing to Aboriginal and Torres Strait Islander people. As I mentioned previously, the community housing sector in New South Wales is the largest. We currently now have around about 50,000 properties under management. That is slightly more than what is shown on the graph here, this data being around about a year old. And we make up approximately half of the entire community housing sector in Australia. Now, moving through to the National Regulatory System for Community Housing, or NERSH for short. Now, prior to the introduction of the national system, each state and territory did have their own state-based registrars, but in 2012, through an intergovernment agreement signed by the federal government and the majority of jurisdictions in Australia, they came together to enact a national law. So the applied law scheme that first involved the relevant legislation being passed through the New South Wales Parliament, and that came into effect on the 1st of January 2014. And thereafter, that legislation was passed in other participating jurisdictions. Now, I do note here that this system, although national in name, unfortunately excludes 2 of the jurisdictions in this country, Victoria and Western Australia. So the 2nd largest community housing system and the 5th largest community housing system, respectively. There are a number of different components of this framework, which I'll get to shortly. But in a nutshell, this regulatory framework does limit the registrar's functions to regulatory activities. So the policy and the funding aspects of community housing in Australia are separate from the registrar. In different jurisdictions, that can look different. Sometimes the registrar is in the same agency as the funding and policy body, but as the case in New South Wales, they are separate. And it is our view that that is the system that probably does work best to keep them at arm's length. Now, right now, this is a voluntary system for community housing providers. CHIA New South Wales is pushing for this to become a mandatory system for everyone involved in delivery of social and affordable housing, but we're not quite there yet. Registration is open to a range of different organisations, providing they can fulfil the eligibility requirements that come under the national law. And I'll get to shortly what that eligibility system looks like and how different providers are classified at different levels. Now, some states and territories do require participation in the national regulatory system as a precondition for receiving government funding, and that is the case in New South Wales. Now, very briefly, the NERSH does have quite a lot of different key features, but I will primarily focus a little bit more on 2 of those. So those are the National Regulatory Code, which are the performance outcomes and standards to which registered providers are required to adhere as a way to maintain their registration in line with national law, and then the tiered registration system. The other components, which I'll briefly touch on, is a national register. So that is a list of all the different providers that are registered across the country. At the moment, there are approximately 300 providers that are on that list. But for various reasons, and particularly in relation to that Indigenous community housing sector that I mentioned before, a lot of those providers are not yet part of this system. And I'll come back later in this presentation to tell you a little bit why that is the case. Then we have state and territory-based registrars in each of the jurisdictions, and they have responsibility for initially confirming the registration of those who apply to participate in the system, undertaking the compliance assessments, and then also cancelling registration if that is unfortunately required. Now, for providers that operate in more than one state or territory of Australia, they unfortunately don't have to deal with a whole host of registrars unless they also happen to be dealing with Victoria and Western Australia. But if they are involved with jurisdictions that are part of the national regulatory system, they only have to deal with one primary registrar as a starting principle, and then thereafter deal with the other jurisdictions only if that is required. And finally, the governance arrangements cover how the different housing ministers at federal and state and territory level will work together as part of this system. Now to the National Regulatory Code. Now, the key thing to note about the National Regulatory Code is that it doesn't actually say how providers should run their businesses, but rather it focuses on the achievement of outcomes in 7 different performance outcomes. Now, the first of those is tenant and housing services, and that's about providing fair and transparent housing and services to tenants, residents, and applicants. The second performance outcome focuses on housing assets, and this is about the maintenance of the property and ensuring that these properties are well maintained so that housing can be provided into the future. The third outcome focuses on community engagement. This is about building relationships with support providers so that tenants have the support that they require to sustain their tenancies. It also focuses on building links with tenants in terms of enabling them to participate in the life and governance of the community housing provider. Fourthly, we have governance, which is about ensuring that providers have a well-maintained governance structure in place. Fifth of those, which is probity, quite easily explained, a high standard of transparency. The sixth is in relation to management, and this is about ensuring that providers use their resources efficiently and cost effectively. And finally, and very importantly, financial viability. And simple explanation is ensuring that providers are financially viable at all times. And now to the tier registration system. This, I understand, is quite similar to the Irish system, except that the numbers are in reverse. So in this case, the tier 1s are the largest organisations and tier 3s are the smaller organisations. The classification system occurs initially at the time of registration and thereafter through compliance assessments. For tier 1s and tier 2s, these happen annually, and for tier 3s, this happens every 2 years. The tier registration system is really about denoting risk and the risk profile of organisations. So with those largest organisations, it's focusing on those that are undertaking development activities on an ongoing basis, refinancing loans through the National Housing Finance Investment Corporation, for example, in order to continue to grow their operations. So what the registrar is looking at when assigning this classification is taking a look at providers that are operating at large scale. And if the worst were to happen, looking at the potential impact on the number of tenants and on assets, and then also considering the reputational risk to the sector. Now, the tier registration system does have its challenges, and I'll cover that off fairly shortly as well. So this gives you a little bit of an indication as to what the NERSH system looks like in New South Wales in terms of the number of providers and the number of properties under management. So as previously noted, this system nationally has 300 providers. We have approximately half of those in New South Wales. So what you can see with chart 1 on the left is that the large majority of providers in the community housing space are those tier 3 organisations. In actuality, the vast majority of those have approximately 20 or so, or 20 or less properties under management. So there are some very small scale organisations in operation. Then to the larger organisations, tier 1s and tier 2s, there are relatively fewer of those. And the tier 2 classification is also relatively and infrequently used, which also does cause some challenges as well. But what you can see with the chart on the right is that the vast majority of properties that are owned or managed in New South Wales are concentrated in the hands of a relatively small number of tier 1 providers. Now, whilst they have the bulk of the system, and it's a relatively small number of providers in operation at that scale, what is interesting to note as to how that's all playing out right now in the system is that we are starting to see gradually a trend, an increasing number of mergers between different providers. It's not necessarily a case of tier 3, the smaller organisations merging into larger organisations, although that does happen. But just a week ago, there was an announcement that 2 of the largest providers in New South Wales, the tier 1 providers, are pursuing a merger. So in future, we would expect to see possibly fewer in the tier 1 space, but with more properties under management. And that's very much about being able to achieve that financial viability and scale. Although these large tier 1 providers in some cases have a few thousand properties under management, there's not necessarily enough in terms of the scale to get to where these providers want to be. So now some lessons learned, what we think is working well in the regulatory space for our members and how we see it play out across the system. GM New South Wales and our members, greatly value regulation, providing that it is well designed and proportionate. Now, for the most part, we believe that those are objectives that have been achieved. In terms of being able to help providers achieve growth and scale, regulation has been incredibly helpful in this context. It's helping to increase confidence in the sector by knowing that we are able to deliver housing to a standard that will enable us to secure that additional financing, but also being able to partake in those growth opportunities. So in recent years, we've seen a range of different initiatives from government. We've seen a large portfolio of previously government managed housing stock being transferred to the management of the sector on long-term leases of 20 years. And this has been a really important development for us. We've also seen the advent of the National Housing Finance Investment Corporation. Now, to date, that aggregator has provided approximately $2 billion worth of loans to community housing providers across the country. And that's helped providers to refinance their loans so that they're being able to deliver their operations in a more cost-efficient way. But that has also yielded an additional 8,000 dwellings, which providers have been able to leverage as a result of those cost savings. So those are benefits that only the registered providers have been able to access, and we've been really pleased to see the support from government in this space. In terms of how the sector is performing against those benchmarks, what we're seeing is a really capable and high-performing sector. Our members are consistently meeting and exceeding the performance benchmarks which are required in their annual or biannual compliance returns. So on metrics like tenant satisfaction, for example, at the moment in New South Wales, we've achieved an 84% satisfaction rating across the board. By comparison, it's approximately somewhere in the vicinity of around 60-something% for those in public housing. So we are getting quite a long way ahead there. In terms of the quality of our assets and the standards to which they're maintained and ensuring that they are quality housing and fit for purpose, we are also running ahead of public housing in that regard as well. Now, over time, we've seen that, consistently seen that our providers are meeting these benchmarks. And there have been relatively few examples whereby the registrar has deemed serious cases of non-compliance, which requires an immediate rectification and/or cases of deregistration. In the last 6 years, to the best of my knowledge, there has only been one tier 2 provider that has actually been deregistered. So it's a really good outcome in that sense, that our members have been able to meet these standards and that community housing is being delivered to the standard that the registrar requires. Now, in that case, with that provider that was deregistered, what the national law provides for in its wind-up clause is for those assets to be transferred to another provider in the same jurisdiction. Now, lastly, what we've also been able to see, and this has been really pleasing as well, is providers being able to move through the tier system as they've increased in scale and have continued to grow. So we've seen examples of providers that have been able to move from tier 3 to tier 2, and also from tier 2 to tier 1. And that's been a really positive sign. Now, in terms of issues, challenges and risks, and being a policy person, these are the parts that we always like to analyse in great detail. As I mentioned before, the NERSH is not a genuine national system. Now, what I should mention is that under the national law, a regulatory review of the system is required every 5 years. This was initiated in 2018, but we have seen, and whilst this initially yielded a flurry of activity, areas of reform, quite ranging reform, we have unfortunately seen it disappear into the ether for some time. Now, this hasn't been just as a result of COVID. These reforms were put on hold last year as well, when New South Wales had its bushfire emergency. And I think one of the challenges that we're facing now is, given the amount of time that has elapsed since that review initially kicked off, the will between jurisdictions to undertake genuine reform, that appetite has dissipated. This is particularly challenging in the context of those two jurisdictions that are not taking part. I understand that they are very much still at loggerheads in terms of coming into the national system. And whilst everyone is in furious agreement that's a really good idea, it is yet to happen, and based on the current appetite, it doesn't look like it's going to happen anytime soon. So in terms of being able to compare the performance and quality of housing and community housing providers and the sorts of services that tenants are receiving, this has been quite challenging given the myriad of definitions and performance standards and all those other things that go with it. It has made it very difficult to compare the system as it's functioning as a whole. Now, as previously mentioned, this system is not a compulsory registration system. And whilst, as I previously mentioned, we would like to see the system move in that direction, the more immediate risk that we are facing is one that's about reputational risk and differentiation. Although the bulk of the sector is still very much comprised of not-for-profit organisations, we are seeing an increasing number of registered and for-profit organisations popping up in this space. Now, moving on to another issue and back to the tier system again. The tier system is not particularly well understood outside of the sector. So it remains a challenge that the tier 1s, 2 and 3s, a lot of financiers and investors still think that this is very much about denoting competence in the quality of the services provided rather than risk and scale. Some of the reforms that are on the table in this space are very much about being able to communicate what this tier system is really meant to do. And whilst we do think that will help to some extent, we're actually in favour of more broad-ranging reform, similar to the Scottish system, which would see the abolition of the tiered system and moving to a more individualised system, which is actually focusing on the profile and activities of individual providers and considering risks that are specific to them. And finally, to my last set of issues, challenges and risks. Right now, there is limited performance information on the performance of tier 3 providers. So as I mentioned before, they are required to report every 2 years. However, their engagement with the registrar is quite limited, and given the amount of time that elapses between performance assessments, that does remain a risk that the registrar doesn't have a full picture of all the challenges are emerging in that space. It's also important to note that tier 3 providers are not a homogenous group. Whilst they consist of very small providers who may be exclusively involved in providing housing services, they also sometimes range to cover organisations, large not-for-profit organisations with hundreds of millions of dollars worth of services that they're delivering in the services from cradle to grave, if you will. And that carries a very different risk profile, yet that's not efficiently or effectively captured under the current system. Now, as I previously mentioned at the beginning of my presentation, there is an Aboriginal community housing sector in New South Wales as well. Registration has been particularly challenging for these organisations to secure. In some cases, these are organisations operating with one person. And so pursuing registration hasn't exactly been a high priority, nor is it possible given that so much of their activity is about simply just keeping the housing organisation going, tending to repairs and maintenance, etc. But what we're already observing is something of a two-speed system whereby the mainstream community housing sector are getting opportunities and funding from government, but the Aboriginal community housing sector is not. Now, if that is contingent, if that is very much reliant on registration, if those providers are not able to secure that, they will continue to face viability challenges into the future and with very limited prospect for growth. And finally, the challenge of COVID-19. I think we've been really lucky in the New South Wales sector that COVID-19 hasn't affected the financial viability of our members to a major degree at this point in time. As a result of government reforms at the onset of COVID-19, people on income support payments actually saw their incomes go up. So correspondingly, and perhaps pleasingly, rental revenues improved amongst our members and rental arrears went down. Now, whilst that was a surprising outcome and one that we hadn't initially anticipated at the outset, these additional payments are, of course, time limited, and it remains a very challenging environment that we're heading into. It's a significant environment of unknowns. So in conclusion, CHIA New South Wales really continues to strongly support regulation. We do believe that there are a number of different reforms that need to be enacted in order to create a regulatory system that will grow with the community housing sector in New South Wales as our sector continues to grow as well. And I'll leave it there. Thank you.
Great, thank you very much, Kathleen. That's fantastic. That really gave us a fantastic overview of the Australian regulatory environment and how the government is involved and the local level, also the registration process, the tier 1 to 3, very similar to ours in reverse, obviously, and then the lessons learned and the issues. And I think there's a few questions coming in from attendees that we'll come back to maybe after John's presentation. So John, I think we'll move on to you next. So let me introduce the next speaker then. It's John Hannigan, CEO of Circle Housing. John has got a lot of experience in the sector, so he'll be bringing his experience from a AHB perspective, and also that sort of perspective in terms of regulation, etc. Okay, John, I'll hand over to you.
Thanks, Martin. I'm just going to double check. Somebody give me a thumbs up that you can hear me okay?
Yep, we can.
Yep, that's great. Thanks, Martin. Okay. Right, I'm going to, first of all, my condolences to Tom's family and also to the department. I worked with Tom for many years and knew him a little bit, and very sad to hear the news. So please pass on our condolences. In terms of regulation, first of all, what I want to do is, I haven't done a slide presentation because I thought on a Friday morning, normally at a conference, everybody is finding it hard to see the screen, never mind get into the auditorium. So it's great that we have so many people here today. I'm just going to talk a little bit about experience that I have in respect of regulation over the years. And first of all, I want to preempt everything I'm saying by saying regulation is good and regulation is absolutely needed. There's absolutely no doubt about that. Since 2004, the ICSH and myself and others have been advocating for regulation. And in 2007, I wrote a paper which actually outlined the deficiency with structural deficiencies within the sector in terms of private finance, and amongst them, and one of the keys was regulation. So it is great to see that we have regulation now progressing within the country as it has done for many years, since 2013. Funders have been saying for years that if we had regulation, statutory regulation, that they would be able to utilize it to lower the level of risk applied to social housing, offer better margins, and offer a greater level of, lower level of requirements in terms of our compliance. It's also good for others, like our contractors, developers, builders, and our tenants, and the public, to know that there's something they can go to ensure accountability is maintained. So regulation is good and needed and is welcomed by all AHBs. It's important, though, that we have the right regulation, and that it is, as has already been said by Caitlin, that it is proportionate and focused. Many years ago, the ICSH created the 3 tiers. It was their idea in Ireland to have the 3 tiers. And at that time, that was to recognize that you could support better the different culture and needs of smaller and larger AHBs in doing that. And in fairness, that has been adopted as a principle by the regulator in terms of the voluntary regulation, and we now see it enshrined effectively in the statutory regulation as well. But it may not be necessarily the best way to structure regulation, and I think that's already been alluded to some extent to by Caitlin. So it is important that whatever we do, while it's there as a tiering prospect, it allows, I suppose, for resources, risks, and deployment of action to be more focused and delivered where higher levels of risk is there. But regulation needs to be and has been seen and is focused on areas of real risk. And I'll come back to what I mean by that in a second. Areas of non-compliance and obviously of critical failure. What's clear is that up to now it's been very collaborative, and in many respects I have found it personally and through the organizations I've worked with very positive in nature. So we are delighted the way it has been to date, and we'd like to see it continue that in the future. We've already heard about legislation from the New South Wales and the Australian perspective. There's been legislation and there's been regulation in the UK for over 20 years. And in that time, it's been evolving from a process of thou shalt not approach to please explain why you're doing that and please explain what you're going to do in respect of it. And it's moving that way a little bit in Ireland as well. It's moved also from a national focus to a regional focus, and to also to be more flexible in terms of its guiding to ensure best practice and open competition is fostered. And that's really important. It is also enables the public and funders to have confidence in the provision of social and affordable housing here in Ireland. Critically though, it has been independent of government, independent of funders and funding, and independent of politics. And we need to ensure that we maintain a similar approach as we go forward. Regulation has a role of ensuring that AHBs are successful in delivering on the government agenda is critical. This week, the Minister has told us how much we have to do, what he expects from us as a sector. And we've seen this morning in some of the press that one of the polls are showing that the second highest priority in terms of budget spend should be on social and affordable housing. So housing is one of those key things that there's a big ask for approved housing bodies to actually provide. We are charities and not-for-profits, but we're also big businesses with big balance sheets. And a lot of those would exceed actually what's some of the largest organizations in the private sector here in Ireland. So we are big. We're also borrowing very significant amounts. And over the next number of years, billions of euros will be borrowed in order to be able to provide social and affordable housing. So we're being measured in terms of our output by government and also in terms of risk through our regulator. And while these two are not mutually exclusive, if we're not careful, one could lead to a default in the other, particularly if there isn't a degree of flexibility in how we are measured. And I'll give you an example on this. Currently, for example, our gearing is a key risk measurement within our financial standards. There are thresholds that have been set at about 66% in terms of our maximum before it starts to become an issue of consideration and concern for the regulator. However, we generally borrow out up to 100% of cost and sometimes 100% of value through the 30% CAF loan provided by the state and the 70% private finance that we might raise through either the HFA or other organizations. So how do we square this potentially restrictive approach with the requirement to deliver more and ensure that we're not actually seen in default of what we do? So the answer to that, I think, is actually we have to do it really carefully. It would be remiss of me if I didn't actually talk a little bit about classification. I just want to touch a little bit on that as part of this process as well. And while classification up to date hasn't really bitten hard, it will start to bite in the near future. And how the government and AHBs work together in providing a positive approach to this is really important. And it is a major risk. And I know that sounds like I'm maybe overstating it a little bit, but it is a major risk for AHBs and for the government, particularly in terms of our delivery of social and affordable housing in the coming years. It's not a material factor today, and I think we would all recognize and acknowledge that. But with our economy requiring so much money to survive and that we need to borrow so much in the open markets in the next few years, it is going to be an issue where we will have to balance housing provision with the provision of hospitals, broadband, roads, etc. Thankfully, Paul and his department, and I'm delighted Paul's talking here today, have been taking this very seriously and are working with us. And we've now set up a working group together where the sector is actually well represented through the ICSH, and I'm delighted to say that I'm also part of it, to get our sector reclassified as was part of the programme for government. But pace is important on this, and we look forward to seeing some of the results over the next few months. In concluding, what I want to say is that AHBs who are enabled by local authorities, work in partnership with local authorities and the government, can provide both a stimulus for our economy and positive outcomes for people in housing need, those in the affordability trap, and there is one, and for the building industry particularly over the coming years. However, the new financial governance and performance standards that have been mooted in the new legislation that's come out and in the legislation that's being brought forward over the next 2 years, in the coming months, they are going to be really important. it's important that these standards ensure that AHBs are empowered to deliver in partnership with government and LAs, and enabling the targets that the government has set for us and those for in housing need requires to deliver. Focus needs to be considered on maintaining a degree of localism. And we've already heard from Caitlin about the merging of tier 3s with tier 1s and tier 1s with tier 1s. And to be honest, there's been a little bit recently focus on how tier 3s might come together in order to be able to continue to operate. And it feels like that's where the focus is, of tidying up in terms of our local areas and our local organizations. But I think the rationalization of tier 1s and tier 2s has got to be handled really carefully. And it shouldn't be because regulation is too burdensome. That should not be one of the factors that drives the mergers to occur. Ensuring that we have good governance and good financial management is really important, and that our tenants are looked after in the right way. They're the critical issues, but actually not because of a burden of regulation. There also needs to be a degree of focus on how obviously tier 3s, AHBs will be regulated, but importantly, there needs to be flexibility within those regulations that come out. And it needs to be a significant part of the element of thinking, as I've demonstrated above with the gearing issue. So finally, let me just reiterate, regulation is good and regulation is absolutely needed, but it does need to be proportionate, progressive, and remain independent into the future. So I'm happy to take any questions, Martin, after that.
Thank you, John. Thank you very much for that nice summary of where we are from an AHB perspective, particularly around some of those areas that are, I want to say issues, but points that we're all discussing more, particularly around classification and the new standards, and then risk with the regulator. So I think that now is an opportunity. We have a number of attendees who would like to ask some questions. So we want to actively promote that. So there's a couple of people there that would like to ask some specific questions. Maybe we'll start off with maybe Greg Campbell has a question specifically for Paul in relation to regulatory standards. Is it possible that maybe we could get Greg on the line, or get him to speak directly? Hi, Greg.
Good morning. Yes, hello, Martin. Thanks.
How are you?
Yes, very good, thank you. How's it all going your end?
Oh, good. Thank you very much.
I have to say I was very impressed to see how well made John's bed is at this time of the morning. So yes, thanks for the opportunity. I wanted to ask a question to Paul about further to what he was saying earlier about the regulatory standards. Having been involved, I and colleagues, we were commissioned by the Housing Agency Regulation Office to assist with the preparation of all three sets of regulatory standards: finance, governance, and performance. It would be interesting to hear how what the department's thinking is around whether it's anticipated that the new standards that are to be considered and adopted by the regulatory authority would involve a starting from scratch exercise, or whether the expectation is to use the existing standards as a starting point and look at how those can be adjusted, improved, developed. Because I'm conscious that when we worked with the regulation office, there was a considerable amount of consultation with tier 3s, with ICSH, and also with tier 2s and tier 1s, and particular efforts were taken to ensure that lessons were learned from the housing regulatory experience in other jurisdictions.
Shall I take that one on then, Martin?
Yes, please, Paul, if you would mind.
Right. Thank you for the question, Greg. Yeah, the establishment of standards for AHBs is set out in Section 37 of the new Act. And I think we would absolutely be mindful, Greg, that, you know, a lot of time has passed over the last 6 years, and I know that the voluntary standards have been updated over time, but the expectation is that the new body will adopt new standards and that there will be a consultation process as part of that. I think the fact that lessons have been learned over the 6 years is important. I think the fact, I mean, John made the very reasonable point about gearing and how, you know, different AHBs have different needs. All of these factors need to be addressed, and I think it would be entirely reasonable to start from scratch, and that would be the expectation. Clearly, the lessons that have been learned over the past 6 years can be factored into any submissions into the new standards, but there's an awful lot good in the current that you would want to learn from. But I think the exercise of developing standards will be a new one. It'll be submitted to the Minister for approval, and that's the route, including the public consultation. The Act also provides in section 37.3 for differentiation of standard across various, well, you can call them tiers at the moment, but it's up to the regulator to decide how they might choose to differentiate. And I'm very much alive to Caitlin's presentation and the fact that in New South Wales you're thinking about more custom-made, tailor-made approaches. Look, in due course, that may be something that the regulator needs to look at. The provision is there in 37 that they may make provisions for different categories of AHBs, and for that purpose have regards to the nature, scale and complexity of the activities. So I think there's a fair degree of latitude there for the regulator to take it in whichever direction they consider appropriate. But I think, Greg, start from scratch is probably the correct word, notwithstanding the fact that there's huge lessons learned over the last 6 years that hopefully would be brought on board as part of that process. Yeah, I think that pretty much sums up my answer.
Thank you. That's clear.
Okay, Greg, are you okay with that?
It's a clear answer.
Yeah.
It is, I have to say, a long process, and if there is just a year from the establishment of the regulatory authority to regulation taking formal effect, starting 3 full sets of standards from scratch, I'm sure the department and the new authority will be mindful of the amount of resource that will be needed to do justice to that.
Okay, thank you. Just maybe I'll bring in Kathleen. Caitlin, if I can just ask your experience from Australia from this perspective, what advice would you have?
Sorry, Martin, I was actually just trying to cover off some of the other questions that were coming.
Oh, sorry, okay.
Possibly provide me with a quick summary. I've been caught out.
So this was on the, maybe Greg, would you want to recap on that one again?
My question to Paul really was around given that there are an existing set of standards for governance, finance, and performance management that have been adopted under the voluntary regulatory framework in Ireland, whether it's anticipated that in putting in place new standards under the new regulatory framework, this would involve starting again from scratch, or using the existing regulatory standards as a basis for providing adjusted and developed standards that take account of experience over the last few years in order to go live at the start of 2022.
Oh, that's probably quite a tough one for me to answer with my Australia experience. I'm not sure if I've got something to offer there. I think in terms of the standards that we've had in place in Australia, in addition, I guess what we've seen is the experience. We've had our regulatory experience and the performance outcomes that have been embedded as part of the national regulatory system. But in some cases, they haven't necessarily gone far enough. So we've been looking into the development of voluntary standards, a set of national community housing standards, which continues to demonstrate the robustness of what our sector can do. So I'm not really sure if I'm able to answer this question.
Okay, thank you, Kathleen. That's great. Thank you very much. John, did you have any comment on this from a AHB perspective?
Yeah, just that I would tend to, first of all, Paul's answer was very clear, and it is also very clear that the current regulation process is also suggesting that there will be new financial and governance and operating standards which will be put in place, and that they will be starting that process shortly in terms of the consideration of them. So there is a great desire to see an updating. They are 6 years old. And what's more is that we know that the sector has progressed quite significantly in that period of time. We are seeing more of a divergence between tier 1 and tier 3 in terms of size, growth, etc. But also it's very clear that there's a need for localism and a need for local organizations. And I see a question here from Jose that will be asked later on that I think is an important question. And I do think that it's important that, as I said in the presentation, that that understanding of and flexibility, because regulation should not be just about what's happening now, but also what happens into the future, and enabling the organizations to continue to deliver on what is required by the government as much as it is by the people who in housing need is a critical part of that thinking.
Okay, thank you, John. Thanks very much. So I'll move on to the next. We've Aisling Flynn has got a particular question for Kathleen. Aisling, are you available to pop in with your question, please?
This is the equivalent of the microphone being rushed around the auditorium trying to find
This is it. This is it. It's like virtual. We remember those days, yeah. Normally it's somewhere like down country, isn't it, John? Yeah. The coffee would have kicked in at this stage after last night.
Hi, good morning, everyone. Good morning, and thank you very much for a great input this morning. Caitlin, my question was just around, and I know that John also alluded to this as well a little bit. It was just around, you mentioned some of the tier ones, so the large community housing organisations, actually some of them merging. I suppose, is there a danger? I suppose my question is, I mean, have you looked at perhaps any issues that might emerge where you have just a very few but very, very large number, large but few number of players kind of in the sector? I suppose just I come from, we're a small AHB, Marillac, but we were specialised. We'll probably always be quite modest in size. But when you're a modest, small AHB or organisation, you're essentially then competing all of the time. You have limited resources, and you're competing particularly for a limited pool of finance for housing projects. And I suppose if you have a few but very large number of players in the sector, then there's the danger to lose some of the focus, in terms of what they were their ethos and what they were set up originally to do. And I suppose just have you thought about that or considered that at all?
Great, thank you very much for your question. That's a really good one. There are lots of different challenges and implications which are built into that. I think the first thing that I would say is that the tension that we face in dealing with the State Housing Authority, we know that from their perspective, they would actually like to deal with fewer of our members over time. So they certainly have a vested interest in seeing the sector consolidate and merge over time. Now, the road is paved with good intentions on the one hand. That is very much about trying to see our members grow and achieve scale. And I absolutely do understand where they're coming from. Now, the inherent danger of that, and this is what you're flagged in your chat, is the question of, does that mean that these members just end up looking like mini extensions of government? And absolutely, that is an inherent risk that we need to be mindful, that those members need to be mindful of. What I would say so far, at the scale at which those members are operating, there is still a very distinct vision and identity and passion for what these providers are doing. Their ethos is that they can deliver housing better than government, but in doing so, we can also deliver housing and services which deliver better outcomes for tenants. So I do think that community ethos is still very much embedded there. And we do believe in, very strongly in the diversity of the sector, that's big and large, big and small rather, that there is room for players of all sizes, and that we think that the strength of the sector comes from its diversity. I think we've got some really interesting members. We've got, for example, a provider that provides housing specifically for young people, which is a segment of the social housing market that's not been well catered for. We also have members that, as I mentioned before, are part of that Aboriginal community housing sector. And they have, as I mentioned previously, that they have struggled to secure registration. They're often struggling to secure government funding as well. And there are a whole host of issues that come with that. But we really believe that it's absolutely important that housing has to be provided to a diverse range of groups, and that we need to have those providers going into the future. So whilst I do think, as I mentioned before, that there will be some consolidation, it's really important that as a sector and as a peak body that we continue to advocate for providers of all sizes. And that's what I hope we do, strike the right balance in doing that.
Okay, great. Thank you.
Great. Okay, thanks, Kathleen.
Thank you.
That's great. Thank you very much, Aisling.
Thank you.
Our next question comes from Kat Davis, and again is for you, Kathleen. Is Kat available?
Can you go to Jose, Martin? Jose,
Yeah, okay, we'll go to
Jose
in next then. Jose, you've got a question for us?
Yes, indeed, and it's actually following on from one that has just been made by Anne, I think it was. Good morning, everybody. Really, my experience of the social housing sector in Ireland is that it's been primarily led by voluntary committees of people that got involved out of social concern. And this is still very much the case in rural areas where the large numbers of small associations are still very much run by volunteer committees who not only move the work, but also carry out the work. And I just wonder if, I know that there is a growing awareness, but I just wonder how the regulatory arrangements will actually be able to deal with this, where you've got self-initiative, if you like, from communities wanting to participate, wanting to carry out this work. And on the other hand, you've got regulatory standards that demand almost a professionalism that these voluntary communities are simply not going to have. And how are you going to avoid disencouraging these voluntary committees and voluntary communities from participating simply because they don't have access to the professional expertise and requirements that are being required by the new standards? I realize it's a very difficult balance and a very difficult tightrope to walk, but it would be a shame to throw the baby out with the bathwater and to end up with just a handful of very professional large associations and essentially discourage local communities from active participation in what is this very important challenge that we all need to be involved in.
Thank you, Jose. Paul, would you like to take that one maybe as initially from an Irish perspective?
Yes, indeed. Yes, indeed. Quite happy. And thank you for the question, Jose. I suppose if I reflect back on the numbers involved, at the moment we have a voluntary regulatory system with somewhere in the order of 260 AHBs participating. We know that the actual number of AHBs out there is significantly greater than that. We're not quite sure, and we're working through the process at the moment because some are there in name only and will be will rescind their status over time, and some have already done that since this statutory process has come into place. But clearly, the new framework will apply to all AHBs that are in existence on the 1st of January 2022. So I think it's important in the first instance that we learn who else is out there, so that we can understand the nature of the AHBs, such as the ones Jose is talking about. But I think also, to be fair, the legislation explicitly provides for the kind of nuanced thinking that Jose is advocating. And I'd go back again to section 37.3, and the specific text in 37.3 talks about making different provision for different categories of AHBs. And the criteria that it might be informed by would be the nature, scale and complexity of the activities, the types of dwellings being managed, the different accommodation needs of different categories, the number of dwellings being provided or management, the level of borrowings and the level of financial risk. So I think it's clearly recognized if you're a very high growth, heavily leveraged AHB, clearly there will be a degree of oversight needed that might be fairly different from an AHB that might have a stable and perhaps relatively small housing stock. So I think that the ground rules have been set clear for the new regulator to accommodate a broad church of AHBs within that. And I think there's also, I'd appeal to organizations like your own, Jose, that when it comes to the consultation on standards, that you make your voice heard so that the regulator does clearly understand that the depth of passion and strategic ambition of the smaller organizations as much as the bigger ones. I was struck by the words that Caitlin talked about, the ethos and the vision and the passion that comes through. We don't want to lose that, definitely not. And we'd like to have a regulatory framework that can accommodate it as well. But it will be part of 2021 will be a busy year for consulting and engaging on those standards. But I think there's room within that framework for them.
Thank you, Paul. Okay, thanks very much for that. And thank you, Jose, for the question. I'd like to go on to Kat Davis next, please, who has a question for Caitlin.
Hi, Caitlin. Thank you for your presentation. Very interesting, and a good evening to you, all the way across the world.
Thank you.
You touched on the issue of proportionality, as did John Hannigan. And I just wondered if you had any practical examples of how you applied the principle of proportionality to regulation. You know, is it different standards? Is it fewer standards? Is it some kind of subjective, somehow watering down of standards? Maybe it's just a couple of practical examples as to how that works, if you could, please.
Yeah, of course. Thanks, Kath. And that's a really good question. In terms of the proportionality of regulation, well, as I mentioned initially, the smallest providers currently only have to complete assessments every 2 years, which is less frequent than the others. And within those 7 performance outcomes, which I mentioned before, there's actually a fairly large number of sub-standards within those performance outcomes, which those providers are not required to demonstrate. And in part, it's because they don't necessarily have the scale and number of staff that those larger providers do. So, for example, in the community engagement space, whilst there is a requirement for those smaller providers to demonstrate some sort of alignment with other support providers in the local area, they're not, for example, also required to build the capacity of the community through intense community engagement activities because they don't have the scale for community development type staff. Now, what is really interesting in the New South Wales context, as I mentioned before, obviously, these smallest providers make up the largest proportion of the sector. And our registrar in New South Wales has been recently undertaking a pilot program to try and best assess what is the right degree of regulation for these providers. Now, what I understand what they were looking at with participating providers was that instead of reporting biannually, they were proposing and seeing, would it work to go on a 4-year rolling program of assessment? Now, that would mean that you do report more frequently, but each time it's less onerous. And I think in that regard, that looks like from at least the early results of that pilot program, it does seem to have reduced the reporting burden for those providers. So, over time, it's good that the registrars, keeping heed of these issues. As I mentioned before, it is certainly an operating risk to not know what's going on in this space. You have 1 year on, 1 year off. And there is such a diversity of these providers that it's really important that we strike the right balance. But at the same time, without expecting organisations with relatively small staffing complements, what we don't ultimately want to see is funds and which can be dedicated for housing and tenants to be eaten up on the cost of regulation and reporting systems. So I don't think anyone would think that's a particularly good outcome.
That's great. Thank you very much indeed, Caitlin. Thank you.
Great.
Thank you.
Thank you, Caitlin. So next we have a question from Orla Cleary, and that's from Orla Cleary from TUA for Paul, please. Is Orla available?
Orla, you're on mute.
Hi, thanks for including me. I just apologise for my awkward setup here in the kitchen.
Hi, Arlen.
It was a question for Paul Lemass on classification. So one of the items that the CSO identified in terms of government control was the fact that local authorities set differential rents at the minute. Is it on the agenda the potential for an AHB differential rent to be introduced? That might be a step in the right direction towards getting us off balance sheet. Is it something that the department is willing to consider?
Thank you for that question, Orla. I suppose nothing would be ruled out explicitly, but I'd be very keen to be clear that these are two distinct issues. The classification of AHB debt on the balance sheet or off the balance sheet of the state is an issue we have to deal with. Separately, the reform of differential rent is an issue that we have to deal with. Now, those will run parallel tracks, and it may be that in the exercise of reclassification that we consider at some point down the road that as part of a non-classified sector, there may be alternative options available for charging rent. But I'd be loath at this point to explicitly link that with the existing review of differential rent and establishment of new rents. I do hear John earlier on when he talked about the need for progress on this, and I fully accept that, and the working group is up and running. But our experience with reclassification is it's not a rapid process. It's going to take time. We've had this in other sectors, and it hasn't always turned out as we'd expected. So I think that the differential rent exercise is one that's much more mature, shall we say. The question of reclassification and what you would have to do if you wanted to reclassify, that question, I suppose we have to define the question a little better before we can get into considering whether it might be appropriate to have a separate scheme of differential rent for AHBs. So I hope that answers your question, Orla, but I think they're on separate tracks, if you will, albeit parallel.
Thanks very much.
Okay, thanks, Paul. Actually, John, you've got a question for Kathleen? John Hannigan?
I do. Yeah. Hi. Thanks for this. Sorry, Kathleen. I'm putting you on the spot again. Kathleen, you mentioned the aggregator that has been formed within the housing sector effectively. And I'm just wondering, can you just outline a bit more about that? Is that at national level, at sub-regional level? And what is its focus? And how did it come about? Because I would suggest that given the way Ireland works, the scale of development and the scale of requirement in Ireland, individual organizations probably can't get to the level that is required in order to make it attractive for significant investors to put in to the sector. So having an aggregator actually, I think, may be one of the solutions that either government or the sector itself might have to consider.
Thanks, John, for the question. And I see that Karen also had a similar question for me as well. So now I will be able to answer them in one. So to clarify, the National Housing Finance Investment Corporation, this was work that was many, many years in the making. It was actually pursued by our current Prime Minister when he was Treasurer in the previous government and developed a real interest in housing and finance. So the NIFIC, as it's called, is currently housed within the Australian Treasury Department. And effectively how it works is a type of bank to the community housing sector. The challenge that many providers in the larger tier one has faced over time is having to deal with the commercial banks taking out loans for a fairly short period of time at interest rates that weren't particularly favourable. Now, the aggregator has been able to solve that, but in doing so, it's not an absolute panacea. So let me clarify what that means. So far, what we've seen nationally is, for the most part, the only organisations that have been able to refinance their loans with the NIFIC are those tier one organisations. So organisations that probably already had great capacity, at least in some shape or form, have been able to unlock the benefits of the NIFIC. What that has, on the good side, what it has meant, as I said previously, is that they've been able to secure lower cost loans and finance. Some organisations are saving in the order of millions of dollars a year, a really good outcome, and that funding has been used in some cases to go back to the cost of building more social and affordable housing supply. I guess the challenge for that so far is that whilst, as I mentioned before, there have been $2 billion worth of loans that have been made nationally, a lot of those loans have been sucked up into refinancing existing operations or refinancing properties that have already been built. The amount of yield in terms of new properties that come out of it have not been probably as great as we would have liked to have seen. But that being said, you know, we're in quite a strange policy environment at the moment. One of the things that we've seen in the COVID-19 environment has been a great coalition of support for building social housing as a way to kickstart the economy, revive the flagging construction industry, etc., etc. Now, instead of direct investment in social and affordable housing, the federal government has elected again, as a result in its current budget, to put more money into the NIFIC, which is great, but as we know, it's not really the most efficient way to finance supply. So whilst on the one hand, we welcome it, on the other hand, it's very frustrating. But what I suppose the good thing has been, and this NIFIC has involved bond raising. So they go out to private investors and they raise that finance. And what we've seen on each of the 3 bond raising rounds is that these rounds have been greatly oversubscribed. By the factor of maybe about 3 to 4. So it does give us hope that there is a lot of untapped potential there. It's given us access to private finance that we haven't been able to previously harness. And we hope that in future that through the NIFIC we can get more of those opportunities, but with a caveat. We actually would like the government to invest directly in housing as well.
Okay, thank you for that, Kathleen. That's very good. Thank you very much. John, does that give us a good flavour of how it goes in Australia? And we actually have a question similarly from an attendee, Brian Scally, in terms of for you as well, Kathleen, in terms of the Australian setup in terms of using private capital for off-balance sheet. Brian, are you available for your question?
Yeah. I am indeed. Hi, Kathleen. Thanks for your presentation. Yeah, my question is really just around the whether the Australian voluntary bodies have actually utilised private capital to fund the delivery of subsidised housing off balance sheet.
Thanks for that. Look, it has happened over time, but it probably hasn't been at a particularly large scale. What we would say in terms of those larger organisations that have been able to develop their own properties, our largest member in New South Wales, actually before the advent of the NIFIC, was able to secure finance for another private entity called the Clean Energy Finance Corporation. So quite an unusual partnership there. But they were only able to do that because they had scale at a range that none of our other members had achieved to that point in time. So whilst our members do try and use their own reserves to invest in additional housing, it does happen. It's still not quite at the scale that we would like to see as yet.
Okay, thanks very much, Kathleen. That's good.
Thank you.
Thanks very much for your answer. Is that okay, Brian?
Yep, it is indeed, yep.
Great. Well, listen, I'd like to just draw to a close now because we've just gone past our 11:30 mark. I'd like to thank our 3 speakers, Paul, Kathleen and John, particularly Kathleen coming all the way in from Australia. Your insight and perspective to us as a sector from a regulation point of view and also some of the other aspects has been very enlightening, and there's a lot of similarities to the structures and that we have here in Ireland. So we've learned quite a lot from today's presentation. And I'm sure some of our colleagues will have links with you again in the future. So thank you very much for coming in. And I should say, while we're still talking about morning, good evening to yourself, and thank you again for that. Thanks, guys, Paul and John, for participating. Thank you for our, I think we had up to nearly 190 attendees this morning for attending. So thank you all very much. And I'd just like to bring this to a close, this morning's session. And just a reminder then for people that there is another session this afternoon for building the landscape for sustainable housing for at 2 p.m. for attendees who want to attend that session this afternoon. Okay, so thank you all very much. I wish you all a good morning. We can all now get a nice cup of coffee. I'm not sure about you, Caitlin, whether you have a coffee. It might be something a bit different. But thank you all, and goodbye. Thanks very much.
Thank you. Bye.
Thank you. Bye-bye.
Respond is an approved housing body and service provider working all around Ireland. Approved housing bodies are not-for-profit organisations that have a social purpose to provide for people's housing needs. We deliver social and affordable homes that are urgently needed in partnership with other agencies, including local authorities, the Department of Housing, the Housing Finance Agency, and many others. Right now, we have 1,288 homes on site. Respond is about people. We provide homes for those who need them. Individuals, families with children, older people, and people with disabilities. Across Ireland, we have 10,378 tenants. Building homes means that people have the security they need to put down roots within sustainable and thriving communities. But the journey doesn't stop once the homes are built. It is really only beginning when we hand over the keys to our tenants and they embark upon their new chapter in their communities. Respond works to improve the lives of the people who live in our communities. We provide 17 early childhood care and education services, 3-day care for older people services working with 180 people, refugee resettlement services in 4 counties, family support services working with 54 families, 6 family homeless services where we have worked with 401 families to date. Respond believes that everyone has the right to a secure, affordable home which meets their needs throughout their lifetime. Respond, building homes and improving lives. Find out more at www.respond.ie.